Hey everyone, welcome. It's great to see you today. Hope you had a great day and maybe a little bit of excitement with all the FOMC, little bit of volatility that we got after the announcement. Welcome. It's great to see. And so what happened? Well, did anything surprising happen? No. We got exactly the 25 basis point rate cut. We got exactly an indication that we are going to get probably another two rate cuts by the end of the year. Now, when we look that didn't work. When we look at the Fed Watch tool, what we see is, that's unfortunate. I shouldn't have refreshed, I guess. If this was working, what you would see is that the market is now projecting that we'll get down to what is the equivalent of two additional rate cuts by the end of the year. That was priced in at one point over 90% probability, but I think near the close we're close to, I think maybe 86 or 88% probability that was going to happen. So basically we got exactly what the market was expecting. And so it's not surprising to me that there's no huge reaction so far in the markets. If the market gets exactly what it's expecting, then it's just going to do whatever it was doing before the potential catalyst occurred. So now that we got exactly what we're expecting, what do we now think that the market's going to do? Exactly what we thought before. Okay, so that we're a little high right now. We do need a bit of pullback. Yes, it did come and touch that EMA 8 today. But to me, that's not enough of a pullback, at least at this point in the market. It might have been over here, but not right now. I think we do still need to kind of tag that EMA 20 at the very least. So I'm looking for, in the next week or so, for this to pull back and touch that EMA 8. If and when we get there, we'll see from there. Does it bounce? Does it keep on going down to the MA 50? I don't have a super clear idea or picture of that right now. I just see the higher probability event is to kind of, at the very least, touch that EMA 20 before we resume movement higher. And there's a lot of reasons for that. It's not just the SPY. We've got the, not so much the QQQ, although yes, to a certain extent, the QQQ as well, actually. And it's also the MAGS, MAGS. Okay, same thing, it's too far away from those moving averages. SMH, a little bit better, but still too far away. This actually looks very similar to SPY. So all of these large cap indices are showing me the same picture. Now the Dow Jones is a little bit different, right? Actually, this is a nice steady movement upwards. So we don't need that pullback. It's been touching the EMA 8 during this entire stretch. We look at IWM, same thing. It's been touching the EMA 8 in the entire stretch. So I am specifically talking about SPY, QQQ, and of course, MAGS and SMH, because those are heavy components of the SPY and QQQ. The other thing is if we look at QQQ versus QQQE, and what we see is that QQQE is right here. It hasn't rematched that all-time high right there. It's kind of just barely starting to move upwards. And then on the RSP, the equal weighted S&P 500, it's already pulled back and touched that EMA 20. So that is the direction that I'm currently expecting the market to move in. It's just over the next week or so, at some point, tag that EMA 20, and I'll be happy. Then we can resume bullishness. The other thing about the rate cut is that, well, mostly that's out of the way. I guess nothing super exciting about that. It is an acknowledgement that unemployment is suddenly front and center, is taking over the CPI and inflation. And unless there's really bad inflation data, then that's not really going to affect the market at this point anymore. The focus is going to shift over to unemployment, tariffs, how tariffs will affect unemployment. And so we need to recognize that focus is slightly different than it was before when we were looking at things like Fed rates, FOMC minutes, and things like this. Hey, Kevin, good to see you. Hi, Peter. Hi, John. And Steven, can't it move the outlined in a single session tomorrow? Can it move down to EMA 20 in a single session? Yeah, it's possible. That's definitely, there's nothing that says it can't or won't. That's definitely, so how do we determine that? How likely that is? How many ATRs away from the EMA 20 is it? So let's take a look and get a precise idea of that. So if I do one ATR up and down, then that is at 654.3. That is still not that to the EMA 20, but we've got to remember tomorrow that EMA 20 will be a little bit higher as well. So how far away is it from a potential, I call it just over one ATR. And just one over one ATR, that's still possible. It's not impossible. It'd be slightly bigger than random, but it's still possible. So there's nothing to say that it can't happen tomorrow. And I wouldn't be surprised, even though it's a little bit more than one ATR away, I wouldn't be surprised if it does tag tomorrow. A lot of times what happens is you get the reaction from the FOMC decision the day after and not immediately after. So we could see a move for sure tomorrow. And if you're in my morning payout program, the reason why I didn't issue a trade was exactly that. You could see the big move actually happen tomorrow rather than today. And we don't want to take that overnight risk. It's also why I did issue a gamma pocket trade, but that was in a ticker that is unlikely to be affected by the interest rate cut decision. So it was relatively safe, but it's hard to find those, right? So the safer thing to do is just wait for that volatility to subside. And what do we mean by volatility? Why do we say that there's volatility? Because if you look at VIX, you say, okay, well, VIX actually volatility came down a little bit from yesterday. But what I'm talking about is realized volatility. Look how small these bars are until we got to the announcement. Look how huge these bars are compared to these little bars right here. And at the end of the day, these bars are still really big compared to these bars over here. So tomorrow, what I want to say, well, we're going to open, and that's usually fairly volatile. And I want to see bars that start to maybe not, like these size or these size over here before I'm super comfortable with opening new positions again. Okay, so I want to see that volatility subside, and then that will be a much safer environment for me to enter the market. Hi, John, good to see you. And hey, James, good to see you too. Okay, so now that we've got that, and now we were saying, hey, we're back to business as usual because the decision didn't really change any direction and any expectations for the market. So now we can start hunting for opportunities. But remember, we don't want to, the timing is going to be important here, where we don't want to enter that position before that volatility subsides. So we can take a look, we can find some interesting stuff, but we don't want to take action until that volatility dies down. Hi, Kay, good to see you. Hey, Omar. And let's take a quick look over here. If we look at what Gamma was suggesting to us today, it was all over the place because of that volatility that was being expected due to the market. And what we see here is that there's a major spike over here at the 659, 664, and a little less to the downside. So the expected range, my expected range this morning was about 656 all the way up to 664. And on the SPY, it was that 65.90 all the way to the 65, was that 50 or? Let's see, 65.50, yep. So let's see how that lined up. Okay, so the high over here at 661.8, okay, we said 661-ish, I believe. Let me make sure. Oh, it's 664. So we traded in a much tighter range than what this gamma exposure was suggesting. The low was down here at 654.3. That was a little surprising that we got that low, but let's see what we initially had from gamma exposure, 654. Yeah, still within this range, but then we ended about 659. So no real surprises there. And like I said on the Telegram channel, today wasn't a great day to try to take a trade based off of these levels, simply because of just how large that volatility was. And then in the S&P index, okay, we said 65.90, which was a good level until this super dip down here. And then on the upper end, 6650, I believe, which is a huge range. What happened? Yeah, 6650, 6590, but we did see exposure as low as 6565. So we did go below that, okay, but it did move right back up, and then 6550 was never even close. So we did trade within the range indicated as well. But again, that's a fairly large range. It wasn't super useful today. And it's not going to be super useful on days where you have a lot of volatility. But we did pretty well. And then if you're an opening playbook, we shared the IWM level. And basically, we tagged that level pretty much on the dot. So actually, Graham had a better picture of it. Okay, so right here, okay, on the opening playbook, I called it 244 on IWM. Immediately after the rate decision, we hit basically 244, a little over it, 17 or 28 or something like that. And then it rejected that level. So remember, gamma levels are areas where we expect a big reaction from the market maker. That big reaction could come in several forms, but one of them is a complete rejection of that level. And that's exactly what happened here. We tagged that 244 exactly, and then we rejected it. And so Graham, he shared with everyone that he would do what he calls a wrap order, basically a vertical trade where the two strikes are surrounding the current price, and he was able to make 77% on that, which is really cool. So gamma levels are important levels. The market does respond to those gamma levels. I don't want to beat that horse to death. We've been talking about gamma quite a bit the last couple of weeks because of the terminal launch, but people are getting great results. We got a great result from that this morning, that I'm very pleased about. So I want to review a couple of trades, and then we'll look for new opportunities. So one of them that we did last Tuesday in the post-market show, this exact show, was OKLO. Oops. That's not cool. I already removed it. I deleted it. Well, if you saw it flash on the screen right there, you'd see that if you had held it onto that OKLO trade today, it was up 364% since Tuesday, this past Tuesday, roughly exactly 1 week ago. And you can see that Tuesday. Okay, Tuesday, this is where we identified it. So we got this huge parabolic move all the way up to here, 365% right there. So definitely we're doing something right with that software and with the opportunities that we're seeing here in the post-market show. Let's see if there's any other trades on the post-market show. Duke, we talked about yesterday, where this should have been stopped out. But what's really cool is it's starting to follow the plan that I outlined yesterday. I said, hey, if your plan says stop out, you stop out. Okay, so we stop out. It's back into the zone, the stop loss zone over here, but that's okay. We follow our plan and we stop ourselves out. Now, what I said was that it might bounce near the levels where we closed yesterday, and it actually did. And I said that if you wanted to, you could enter a new trade. So if on the low of today, near where it closed yesterday, you could have entered. And what did I say? You would target the MA50. And look how close we came to the MA50 today. So in a single day, actually, it would end up being a day trade. You could have made quite a bit of money right here. And so now that that has already occurred, what we're waiting for is a breakout above the MA50, and then we can target that 125 gamma pocket again. So over here, this was a baby loss. It was about 24% loss because of this unexpected move downwards. You would have more than made up for it on a 0-day intraday trade over here. And then you have another opportunity. If it breaks above the MA50, then you could go after that same 125 gamma pocket that we were targeting before and have another very nice lucrative trade, okay? But it's important that you followed the plan and took the stop loss, because if you didn't, then all you did was cover a little bit over here. That's it. You're still in a losing position. Whereas if you closed it, because we closed below the stop loss, and then you entered on the new level and traded it up to the MA50, then you are in profit because you lost 24% here. And then I don't know the exact, right? But if you're doing a 1 week DTE trade, so if you went out to September 26th, why September 26th? Because this distance from here to the MA50 is very small. The ATR is $1.48. And then we're talking about a trade that went from $1.20 or 120 to 120.48. So that's less than one ATR. So you would expect it to be able to hit that in 1 or 2 days. And that's why next week expiration would be appropriate. And so this trade would have made at least 60, 70%, some maybe even 80 or 90%. Okay, so minus 24% plus, just let's be conservative and just say 50%. You're up 24% right now. Okay, because you followed the plan. You were willing to stop yourself out and then follow the new trade plan. Whereas if you were stubborn and say, I can't take a loss, I care about my win rate, my ego doesn't let me say that I lost, well, then you're still in a losing position right now. You would still be down, you should still be down, I don't know, 20, 15-ish% right here. Okay, 20, somewhere between 24 and 10%, you'd still be down right here. Whereas if you quelled your ego, willing to admit that you're wrong or that your plan didn't go as planned, and then re-enter on the trade idea, you're already up. And if we break above, then you could target the 125 again, and then you'll be up big. Okay, so Duke, that's how Duke played out so far. And I think that was the last of our trades that were still open in the post market. Why can I not find my option strat? If you guys can think of another one, let me know and we'll check on it. Let's see. Can you explain when picking a long call or put besides IV, what you look at in gamma? Explain it like a third grader. Yeah, all I care about is a giant outsized gamma pocket. That's it. So if I run my scanner, I take one of these top results. Okay, let's just say, I haven't looked at any of these, but just say Delta Airlines. Okay. And I just look for a large gamma pocket, especially if there's one huge clear level. Okay, there's not on Delta Airlines, there's several levels. Let me find one that has one huge clear level. Let me open a couple of these, just in case. Okay, ETN, there we go. It's not, I mean, there's a couple that are similar. Like this one is about a little over half the size, right? And this one's only a third the size. So there is a very clear level here at 380. It would be better if this one was shrunk more. But all this tells me is that we could hit 380, and then after 380, we could hit 410. So I'm just looking for this huge gamma pocket in the direction I want to trade, and that's it. So I'm pretty sure a third grader could follow that. Okay, that's all we're looking for. Yeah. Greetings. See you. Good to see you, Bob. Good to see you. Okay, so let me know if that was too simple, Steve, and I'll be happy to explain in more detail if that's what you need. Okay. So back in SPY, So now that I know that the market got exactly what it expected, then it's back to business as usual. And what I want to do now is I actually don't want to be trading breakout opportunities because I'm expecting the entire market to pull back. I don't want to go short because I believe it to be shallow pullback. And it's difficult to go long unless it's got to be on a pullback that is already ready to bounce. So it's moving a little bit ahead of the market. So the market we're expecting to come down and bounce. Well, if we can find something that did already come down and started to bounce today, then that could be compelling and interesting, okay? So let's just see if I can identify anything like that, and even better if it's in a sector that I really like. So what we're looking for is maybe a cross below the EMA 8 and up, sort of like the SPY right here, okay? Except I expect a deeper one, and actually this is a really great time to look for ones where you've got the medium-term trend, and then you have a reversion. The thing that I like to talk about the most often in the post-market review, where the short-term reverts back into the direction of the long-term. Okay, we don't have that here, obviously, because this. Okay, we don't have the we don't have the move against the long-term trend, and then a resumption of. So we need something that's a little bit ahead of that. And I'll say, let's see, GSAT did it today. Okay. Yeah, there you go. Yeah, GSAT. GSAT did it today. So GSAT is a good count. Yesterday would have been better, okay, but GSAT clearly did that today. And then how would you set a target for something like this? Well, there should be a bit of resistance over here, somewhere in between here. That's a large range. It makes it harder to pinpoint an exact level, but I'll use a nice round number because we have a tendency to move around round numbers because of the options market. And I can see if this is supported by a gamma pocket in GSAT. So $35, tiny bit at, oh, what is this? It says 40. So 38, yes, there is a, in between 35 and 40, is there a significant gamma pocket at 38? Yes, but by far the more significant gamma pocket is at 40. So, so we can go, that's 38, and that's 40. Okay. So I can wait until if we hit 38, then I can see maybe I will hang on for 40. So the way that I personally would structure this trade is ideally we would get in closer to that EMA 8, but it may not give us a choice because it already started moving. And so I need to know if this is lucrative enough, it gives me a good enough reward risk ratio for me to actually go into their trade. Because if I have to take the closing price today, okay, where do I set my stop loss? I would set it, well, I could set it a little below that EMA 8 at the low of this bar right here. That would be obviously a little bit more risky, but is that enough? Is that 1 ATR away or roughly 1 ATR away? Let's see, 3.05. Yeah, it is more than 1 ATR away. So that's a perfectly acceptable place to put it. And now I would need a better than 1-to-1 reward risk ratio, preferably 2-to-1. And the outside of minimum acceptable one that I like to take is a 1.5. But again, because we have a higher expected win rate on this, better than 50-50, 1-to-1 is acceptable. It's not great, but it is acceptable. And we do, if we target 38, then we have a 1.23, or just call it 1.25 reward to risk ratio. It's acceptable. It's okay. So what I could do is I could do a 2-lot or even lot. Okay, so say in multiples of 2, and then I can take half off or 60% or 75% off when we hit 38, and I can leave the rest as runners and then target that 40, which is better. That's 1.87 reward to risk ratio. That's pretty close to 2. And then that's a perfectly great and perfectly acceptable trade. Okay. So that's how I would be setting up a trade on GSAT. Okay, any questions about that? And we can look for some more over here, especially if we like the sector that it's in. Globestar, I believe, what is that? Satellite? I'm not sure exactly what they do. Yeah, satellite voice and data service. So it's a little bit of comms, a little bit of tech. Very cool. Thank you for sharing that, Bob. Okay. All right, let's see. Well, so how would we hunt down and look for these? Well, you could create a scanner. I do have scanners that do this. Nothing on platforms that I can share. Like I don't have a stock fetcher for it. It's not something I can easily share. VSAT, is that also satellite? It could be a sector here. Satellite, this is nice and bullish. It is not exactly the reversion to short-term reversion to the longer term, unless we're talking about a few days ago. So this is the longer term trend. And then over here, the reversion would have happened on this green bar right here. So a little bit late, but the good news is it hasn't really moved all that far and is hugging that EMA 8. It's touched it almost every bar since. And so I don't have to accept the closing price on this one. I could set a target entry at or near the EMA 8 right here. Okay. Tomorrow. And then I can put this stop loss over here a little bit below the EMA 20. And so I'm going to set it just below the low of this bar right here. Okay, because that gets me a little bit below that EMA 20. And I can set up my 2-to-1 reward risk ratio right there, which looks pretty good at 35.44. And then if I want, that's already good. That's already great. But if I want to, I can confirm with, let's see if there's a gamma pocket here, near that 35 or 36 or 35.5 level. And look right there, 35. Nice big gamma pocket at 35. Really big. That's exactly what I'd be looking for. There's another big one to the downside that would be more of support. Since we're pretty close to 35, we are more likely to head towards the 35 before we head towards that 25. So I'd be going over here and say, okay, maybe given all that information, I'm not going to expect 35. Maybe I'm just going to target, 35 and 44. I'm just going to target $35 right there, or just below 35. And I'll have a 1.75 to 1 reward risk ratio, which is just dandy. It's just fine. So we can make this work if I say enter at the EMA 8 rather than just pop in at the close today or at the open tomorrow, right? If it happens to open near today's close. And so, because if I try to do that up from today's close, then suddenly that's not even a 1-to-1 reward risk ratio anymore. I would have to move my stop loss to somewhere weird in the middle of nowhere. And my ATRs are 2.06. Okay, that's 2.9 away. That's a large number of ATRs. Whereas if I do this, my stop loss is basically exactly 1 ATR away. So I might consider scooching that down a little bit so that's at 1 ATR or just slightly above 1 ATR. Okay. And then again, I still have a 1.65 to 1 reward risk ratio. That's perfectly fine, perfectly acceptable. Okay. GNRC. Typed it in wrong. GNRC. Generac. Okay. Here, this is not the pattern that we just talked about. That doesn't mean that it can't work. It's just not the highest probability. So this, I'd be looking for a bounce off of the MA50. And not quite close enough today for me to consider that the beginning of a bounce off of the MA50. Okay, so I would be targeting much closer to MA50 if we can get down there like this. But I also need to be aware that this EMA 20, EMA 8, and sideways consolidation area right here is going to act as some sort of a resistance. It may not be very strong resistance, but it will act as some sort of resistance. And then where do I put my stop loss? Certainly at the very least, a little bit below the MA50. And if I'm going to use these bars over here and to say, hey, I don't want to get stopped out by randomness, I've got to go around 1 ATR or more down. So I'm going to look for this low right here. That's a little bit closer to 1 ATR. That's 5.02 versus 5.19. That's pretty close. So let me just get to at least 5.19. So that's 5.29 right there. Okay, and if I do that, now I have a 1-to-1 reward risk ratio trade. Okay, and yeah, it's okay if you believe in a MA50 bounce. So I would call this an okay trade because a bounce off of the MA50 just by itself, I guess it's a reasonable level of support right here. Would that be better than a 50% chance win rate? Yeah, but how much better? Can I say 70, 80%? Probably not. Maybe 60, 65%, and then 1-to-1 reward risk ratio. It's just not. If I have GNRC and I have VSAT, well, VSAT is the superior trade. So I'd rather take the VSAT trade than the GNRC trade. You see how we evaluate that? Just because we find a trade that is acceptable, I also have to consider my portfolio, how much cash I have available. Can I go into both positions? Would I even want to go to both positions? I definitely don't want to go into GSAT and VSAT since they're both satellite companies. I'm doubling up my risk for no reason. So I would only go into either GSAT or VSAT. And then GNRC, I guess I believe they're insurance. Let me make sure. If they are, then they're different enough that I could go into both, but I'd rather find a better opportunity than GNRC because it's just okay. And maybe a little bit less than just okay. It's kind of a meh. Yeah, on net, I can probably make money with it, but it's not a compelling amount of money that I would make with it. Manufacturer of energy storage. Okay, got it. Okay, got it. I sort of generators, I guess. Yeah, generators. So unrelated. So we could go into both of them, but if I only had one allocation available in my portfolio, I'd definitely go VSAT. And then even if I had two allocations, do I want this opportunity? I'd probably hunt for a better opportunity rather than go into this one. Okay. Make sense? And then you say, well, Kane, what if I want to target up here, okay, and actually make it a 2-to-1 reward risk ratio trade? Great. This looks like a good level here too. Just know that it might struggle a little bit along the way when it hits these levels. So it might go up to that level and chop around and retest it a couple times before it goes up. And you got to account for that in your expiration and the time decay, which again means that it is not going to be as lucrative of a trade versus a trade where I believe it could just go straight up without that resistance. Okay. So either way, we're probably going to be able to find a better trade than GNRC, but it's not like I said, it's not a bad trade. It's just not an amazing trade. Looks like we're reviewing Roger's trade. Oh, really? Okay. Okay. Whatever. If you guys are feeding me Roger's trades, then yeah. Roger introduced us to Kane. Why not test the trades of Kane? Yeah. No reason. No reason. I'm happy to evaluate, and sometimes we're going to line up on our opinions, and sometimes we're not going to line up on our opinions. We are. I'm sure we look at things pretty similarly. We both have very institutional viewpoints, but we still have slightly, at the very least, a little bit different viewpoints. GEX levels on GNRC, sure, I can do that. Well, this is a real bit of a mixed bag here. We have negative gamma at 190, positive gamma at 193. That's kind of interesting. So the zero gamma and a little bit of resistance, we're below 185. Or 185, where did we close? 181, yeah, a little bit of resistance at 185. And then the major gamma pocket we would go after is that 192.5. You got this weird negative gamma at 190. So let's see what levels I drew on the chart. What did we say that 185, 190, 192.5? Come on. 185. Okay. Basically exactly where I said we would hit resistance. Okay, so if you were looking for a one-to-one reward risk ratio trade, okay, fine. And then you got 190 with that weird gamma level. That's exactly where we put our 2-to-1 reward risk ratio trade. And then maybe if we could get beyond that weird gamma level right there, then 192.5. That's a little bit, that's going to be better than a 2-to-1 reward risk ratio. But I would just set it up as I guess either the 1-to-1 or 2-to-1 reward risk ratio. I would just go after that. Okay, that's a good reward risk ratio right there. 2-to-1 is good enough. Yeah. Because of we got that weird 190 in the way. It's an unusual situation. It could help, but because that negative gamma generally is an accelerator, but it does create a little bit of a weird situation for us. So I wouldn't go after that higher gamma level. And this is already 2-to-1 reward risk ratio trade. So yeah, it's a little bit more interesting now, but still, if I was going to choose between GNRC or VSAT or GSAT, I would choose VSAT or GSAT. QBTS and NXT. Sure, why not? I guess today's session will just be looking at the trades that you guys want to. I'm happy to do that. QBTS. Ooh, QBTS has already parabolic. That's going to be difficult to chase. You definitely wouldn't want to chase into it. Maybe a pullback entry would be okay. Breakout right there, basically, today, and it just took off. So I would be looking for a pullback entry, and the best pullback entry is either to this line that I just drew, or maybe right here, because that's an important level as well. Basically, both of those levels are pretty much straddling 20. Okay, so we might as well do 20, because if we do have a gamma level, it's far more likely to be at 20 than it is at those levels that we just drew. Okay, so basically, if I did want to trade QBTS, it would be this. And remember, in this particular environment with the SPY, the expectation of pulling back, we don't really want to trade breakouts anyways. Pullback entry is far more likely. You'll get it more likely to actually win the trade if you do the pullback entry rather than a breakout entry right now. So let's just see what those levels are on QBTS. Oh, you're welcome, Lise. Thank you. Thank you very much. Okay, so 20 to 20, look where that major gamma level is. Below support, we've got support at 20. We've got a target at 25. If it can get beyond 25, it can get to 30. So 20, 25, and 30. And, okay, we drew the support right at 20. So if it can pull back to that major gamma pocket below and bounce, then I will be interested, and I will be interested in targeting initially 25. Okay, so basically that trade would look like this. And we target 25, which is quite lucrative already. I don't need to target 30. If it breaks through 25, then I've got another trade I can re-enter and then target 30. So I don't need to do that now. And then over here, where do you put your stop loss? I mean, probably over here, near that EMA, current EMA 8 level. By the time we get there, that EMA 8, I'm sure will be higher. And so we're looking more for horizontal areas right now. And you see this, we did react off of near these levels several times. So I probably want it a more, a more round number. So we do 1850. Okay. So if I do this trade, that we've got a 3.33 to 1 reward risk ratio trade on our hands, which is excellent. Okay, so this could be something that you put on your watch list. We say QBTS alert me when we cross or touch 25 or 25.15 if you want to give yourself a little bit of a heads up to prepare for that trade. Okay, so maybe I'll do that. Okay, so 25.25. Okay, so I know to watch out that it might be approaching an entry level. But remember, I'm not going to, just because it comes and touches 25 doesn't mean I'm going to trade it. I'm going to watch it touch 25 and then bounce up above 25. So my actual entry isn't going to be 25. It'd be something like 25.25 or 25.5. Okay. Oops, that's oops. I'm doing the wrong one. It's not going to be 20. It's going to be something like 20.25 or 20.5. Okay, and then this, I need to change to 20.25. Okay, and that's still a 2.71 to 1 reward risk ratio. And then let's take NXT. So basically we're learning how okay, actually, let me take a step back. What was QBTS? The reason why I would go into this trade, the trade idea, is we have a multi-level tested multiple times, breakout, and then pull back. That is my trade idea. Okay, the timing is not right now. The timing is when it pulls back to $20 and bounces off of it. Okay, the execution we will determine at the time when this happens or if it happens, because it does me absolutely no good unless I know I'm going to trade the equity. It does me no good to try to identify a option right now, because I have no idea what the volatility is going to be at that point in time, the price of each option, and all of this stuff. Okay, so we can't really determine the option until the time of the trade. And then, but we did put the management in place already, except for the length of time stop. Okay, that's the only thing that's missing from that. Okay, so I just want to be clear that we're not trading the setup. We're trading an idea, and the idea is that quantum wave is in an uptrend, a very clear uptrend ever since the earnings right here. We see more and more volatility, more and more volume that's indicating a lot of interest. I imagine this is a quantum computing stock. There's a lot of interest going into that right now. So there's a shift of focus into this particular sector, and QBTS has been getting a lot of attention because of that. We believe that the S&P 500 is still in a bullish market, even though we think that it could pull back a little bit. We do believe that we are still overall in a bullish environment, and until we're proven otherwise, we're going to go longs. And therefore, when I see a pattern like this, when we see a breakout opportunity and pullback and bounce from that, that is a high probability entry, and that is my entire trade idea. Okay, it's not just, hey, breakout, bounce, pull back and bounce. That's not my trade idea. Okay, the trade idea is everything that I just said, in addition to this pattern and pullback. Okay, so I just wanted to clarify that. Stephen, I can make that part of this discussion. So Stephen says, it would be good to learn how to repair trades going south, for instance, driving cutoff calls, and what to be thinking about. In my opinion, based on my over 20 years of professional trading, managing $1.7 trillion funds, trading $200 billion a day, okay? You are wasting your time and you're wasting your investment capital and you're feeding your ego if you try to repair a trade. And I will say that to anyone's face. Any guru, any trader out there who goes around and says, let me teach you how to repair a trade. I'm like, why are you wasting everyone's time? In my opinion, you admit that you were wrong. You thought it was going, just like the Duke trade. Okay? Just like the Duke trade. I shared with you guys a trade on Duke a few days ago, and it broke my plan. Yesterday, it broke my stop loss. And what I told you guys was, take the loss. I'm not going to be right 100% of the time. I'm not going to say, oh, let's repair this trade, and actually it turned out a winner. Oh, I still have a 100% win rate. Nobody cares on Wall Street. Nobody cares what your win rate is, as long as it's not like 20%. If it's 35% or better, you're good, as long as you're net profitable by the end of the year, which means you have an amazing reward risk ratio if you can win only 35% of the time, but still be net profitable a significant amount by the end of the year, okay? Nobody cares. It is a meaningless metric, okay, to your win rate. You just have to make money. And if you cannot admit that you are wrong, then you are going to spend more money and more effort and more energy trying to repair this trade when you could have just taken that money out and put it into a good trade. So in Duke, I showed that to you. If you said, hey, let me move my stop loss down further to the MA90, I don't want to admit that I'm wrong. I'm going to change my trade. I'm going to change it to stop loss at MA90. And oh, look, it went back up. It went back into my stop loss area. So I don't have to stop out. I'm still in the trade. I haven't taken a loss yet. Fine. You're still down 15, 20% on that trade. Whereas if you did it my way and you take the loss, admit you were wrong, it did not go in the direction that you want it to go, take the loss, take your 24% loss. You could have had a 70, 80% winner today based on the plan I outlined yesterday, which was a bounce from the level, from that low up to the MA50, which is exactly what it did today. You would have gotten at least a 50% gain, which is still better than 24, 25% loss on this. Okay. And you're already up. You've already made money. And I gave you an additional plan where if it breaks above the MA50 to the 125, you're probably going to make another 50 to 100 to 150% on that move right there. And you'll made a lot of money versus sitting in this wrong trade and say, I'm repairing my trade by changing my stop loss over here. And then eventually it floats back up to that 125. And then net, you lost time decay and whatever position you're in. Yeah, maybe you still make 80 or 100%. But here, I took the minus 24 and I made the 50%. And then I made another 120, 25. I'm still outperforming that. So you are making yourself less efficient if you can't take the loss. And if you continuously exhibit that behavior, you are going to you're going to lose money. Okay. So the people who are like, let's roll. I don't want to take a loss. Let's roll. They keep throwing more good money into a trade idea that has already proven to be bad. And they're continuously funding their bad idea. And every once in a while, they come out with a itty bitty little profit after 3, 4, 5, 6 rolls. And you spent all that time in a bad trade just to make a tiny little bit of money. Or worst case scenario, which I hear horror stories from people all the time, is they end up rolling it 9 or 10 times and they can't do it anymore. And then you're like at a 5 or 6 or 700% loss. That's a terrible situation to be in. Do not repair trades. That is my absolute strong opinion. Okay, there's plenty of people with a different opinion, but I will never show or teach you how to repair trades because I don't do it. I don't care how to do it. I don't care to know how to do it. I will take the loss 100% of the time. Just take the loss, admit that you're wrong, find somewhere better to put your money that will recover faster than your little fix on the trade. Okay, so I'm happy to share that and say I don't fix trades, and I highly recommend that you completely delete that concept from your mind of fixing a trade. Go into a new trade. That's my opinion. Go into a new trade that is better because your trade already proved that it wasn't that good. Okay, it already proved to be a bad trade. This Duke trade already proved itself to be a bad trade. I found a better trade. It happened also to be in Duke, right? That made up for it. Okay, and that's how you go about quote unquote fixing bad trades. Take the loss, find a better trade. The loss is factored in if your trading is good. Yeah, if you have a good, strong system, the loss is already factored into that. Yes, that's true. Okay. All right, you're welcome, John. So take the medicine and move on. Absolutely, absolutely. Yeah, spot on. But with a credit spread, we can roll it further. Yes, but if you roll it further, okay. If you roll it further, it is going to cost you money to roll it further. So now you've added money to what should have been your fixed allocation amount already. So now you have more money into a trade, and that trade has already told you it's not going to perform as well as you thought. So if initially you weren't willing to put in that much money on a trade that you thought was good, why are you putting that money into a trade that you know isn't as good as what you thought it was before? It's stupid. Take that same money and put it into a trade that you think is at least as good as the one that proved to be bad. Right? Doesn't that make better sense? Put your money into something that is better. Why do you have to fix that trade? Why can't you just go into a trade that is better? Is that making sense to you? If I have an old Toyota that breaks down and I have $50,000, does it make sense for me to take my $50,000 and fix that Toyota and have no guarantees that 3 months down the line, it's not going to break down again? Just say it's like a 50-year-old Toyota, and maybe Toyota has too good of a reputation. Maybe I shouldn't be saying Toyota, like a old Pinto, okay? I don't care what it is. I'm trying to fix an old car that has already proven to be unreliable. And I'm using old parts to fix it. It's so old that there's no new manufacturer's parts. So I'm pulling a part from an old car and putting it into my old car and hoping that it keeps on running. But I've got $50,000. Why don't I just go and buy a new car and never have to worry about that? Is that new car not going to perform better than that old rolled down Pinto or whatever it is? Absolutely. Is that not a better use of my money? Am I not going to get better value buying that new car or maybe like a 1-year-old used car than that old Pinto, where I have to keep repairing, and this thing goes wrong and another thing goes wrong, I have to keep repairing it. It doesn't make sense. On a trade, admit that you're wrong. It's already a bad trade. Why do you want to put more money into it? Go into a good trade, an excellent trade. Go into a VSAT trade that we just went into. Why would I repair a Duke trade that already failed me if I could just go into that VSAT trade and have an excellent 2-to-1 reward risk ratio with a very high probability? If I repair my Duke trade, okay, I maybe have a 60% possibility of winning now. I go into this VSAT trade, I have excellent, probably 70 to 80% possibility of winning. And I have a 2-to-1 reward risk ratio, whereas on my repair trade, every time I repair it, my reward risk ratio goes lower and lower. So if I started out with a 2-to-1 reward risk ratio, when I repair it, it's only going to be like a 1.2 or maybe even 1-to-1 reward risk ratio. And then if I have to repair it again, now it's at a 0.8-to-1 reward risk ratio. And if I have to repair it again, now it's at a 0.1-to-1 reward risk ratio. And this is why people who keep on rolling and rolling and rolling and rolling end up losing a lot of money, because they end up with a tiny itty bitty bit of profit. And then they lose their money. It's sort of like if you guys know the martingale system, if I'm playing roulette, I have a roughly 50% chance that it's going to land on red or it's going to land on black. Okay? And if I'm playing a game where I roughly win one and lose one, if it's on red or black and I guess correctly, okay, so some people, like, if I lose, then I'm going to double my bet. And if I lose, I'm going to double my bet. If I lose, I'm going to double my bet. That's called a martingale trading system. Okay. And they say, well, eventually my losing streak is going to end. And then by the time if I win, if you do the math, what ends up happening is, let me show you this. This is important. That's why I'm spending so much time on it, okay? If I lose, then I lost one, right? But then I'm going to double my bet, okay? And if I lose, and I lose, and I lose, and I lose. So I got -2, -4, -8, -8, -16, and then finally I win. Okay, I finally win 32. What does this add up to? It adds up to 1. So I just risked $32 just to be a net winner of $1. But what if I lose again? Holy crap. I am now down $63. Okay? And then now I'm going to put 64 on. And if I lose that too, okay, now I'm down $127. Okay. And if I do that again, and I happen to win this one, I make $1. I risk 1, 2, 4, 8, 16, 32, 64. Then I risked 128 again. A total, I have $255 into this stupid repair trade. And I end up with $1. That is a 1 to 255 reward risk ratio. It's crap. If you keep doing this, you will lose money. Okay? You will lose money. Because you don't have an infinite capacity to keep on doing this. You don't have infinite funds. Okay, so you will lose money if you do this. Do not go and try to repair trades. This is a losing betting strategy, and it's a losing trading and investing strategy. Do not repair your trades. You will end up a loser, I promise you. Okay, I've never seen anyone over long term, over the life of their entire trading career, actually survive this. Okay. Mentioned you use Tradier. What software do I use for? I use Tradier's built-in software. I don't put anything on top of it. A stop loss is just I use mental stops if I'm trading options, because options are not nearly liquid enough for you to put a stop loss level in there. So you use trade alerts. If VSAT crosses below 29.4, I get an alert. Okay, then I go and I stop myself out. But by the way, if we're trading daily, okay, so I'm swing trading, I want it to close below my stop loss. Just because it crosses below it intraday, I don't care. So I'm going to look at this towards the end of the day in the last 15, 20 minutes of the day, 10 minutes of the day. And if it looks like it's going to close below my stop loss, then I'll go ahead and stop myself out in an options trade. If you're trading equities, then you can use the exact level because it's liquid enough where you can just set that stop loss level and put it in as an order. But options are not liquid enough for you to do that. The market maker will pick you off every single time and just thank you for making them easy money. Okay, so you don't set stop loss levels on options. Fix a Tesla. That's funny. What does gamma look like over the next 2 days on AVGO? All right, martingale. Yeah, fastest way on a planet to lose money. Exactly, Jason. Yes. Okay, take your loss and move on. So we'll evaluate real quickly because people asked AVGO, and then I think that was it. Okay, or NXT. So we'll do it real fast. NXT, a lot of chopping sideways. This is not really directional move. So this is not going to be interesting until it makes a move, until it breaks out. And again, we need some sort of pullback either to an EMA 8, EMA 20, or a flat support level. So NXT is not interesting to me at all because who knows how long this chop could last. Okay, it could even last so long that the MA 50 crawls up here and then, right, so we just don't know. And this is very volatile, very wicky. AVGO. AVGO gap up, did break out and now coming back to retest an EMA 8, but it hasn't bounced yet. So I need to see that bounce because it could come down and bounce off of the EMA 20 instead. It could come down and fill the gap and test this instead and bounce off of that instead. Okay, so I need to see the bounce. But if we do get a bounce, then fine. Okay, then this could go higher. And so we can just do a quick gamma level on AVGO. I can do NXT too, but it's just not that interesting of a stock right now. It's not the right timing for it. Okay, so and then you can see the big gamma pocket is just simply support at 65 and there's nothing really compelling above it. So that's reflecting the fact that it's just kind of choppy sideways. Okay, so nothing too exciting about NXT, AVGO. Maverick fired a trigger on CLBT. Do you have a chance? Have a target? Okay, I can look at that too. Okay. Our PayPal. All right. Last one. PayPal is the absolute last one. Let's see. This is AVGO. AVGO, nice, a lot of gamma above it. The little bit might have a little bit of trouble getting above 350. If it can get up there, then at the very least we can target 370. And then if we get beyond 370, then obviously these other ones will start to come and play. We have a nice little support right there at 342.5. So AVGO is looking like it's a viable trade. Okay, so based on what we saw technically, okay, it's matching up with these gamma levels. So we talked about 350 may be a little bit difficult to get above. That's basically the EMA 8 because it is below it. So it does have to bounce. Like I said, it does have to bounce first, get above that 350 level, and then it could be on its way towards 360, then 370. And if it gets beyond 370, that's exactly the resistance right here, the high right here. If it breaks above that, then you've got a breakout trade on your hands. Okay, and then CLBT and then PayPal. CLBT, Maverick trade. It's already, is that, okay, I guess the Maverick trade, I definitely would be out by the MA200 or even this VWAP right here. But CLBT. Okay, we've got, yeah, we're basically right on top of resistance right here at 17.5, but looks like we could target 20. I thought, is this? Yeah, that's 17.5. Okay, so 20 is too far away. It's too far away, especially on a 50 cent, 50 cent ATR. So I would just target the, whenever Maverick tells you to get out, or you could target this MA200 or this year-to-date VWAP. Okay, year-to-date VWAP. And then last one, PayPal. Okay, PayPal. A little bit of chopper overall. We would take this downward. I would take this as a downward moving trade. That MA50 is still in a downtrend, and then that EMA8 just is going against it. So I would want to see that EMA8 come back down before I had an entry on this, and I would target it to the downside. And thank you for keeping it simple for yeah, you're very welcome. You're very welcome. Yeah. And then over here, okay, so it looks like a bit of resistance at 70. Okay, that is the major gamma pocket right there. So I would be looking for potentially a bounce off of 70, which is exactly that MA50 pretty much. Okay, very close to that MA50. We got sort of close to it. So if it does go up, I wouldn't count on it getting above that 70. And so maybe now is not entry. I wouldn't, like I said, I wouldn't enter until this EMA8 curves back downwards. And so it could go up to 70 before it does that. It might bounce off of that 70. By the time it gets to 70, that MA50 might be right at that same level. Okay, so I'd be playing, and look how important that level was. We bounced off of it, bounced off of it, bounced off of it. Okay, so I'd just be playing a bounce off of that same level, bounce off of that 70 downwards. That's how I'd play PayPal. All right. Okay, I hope that makes sense to everyone, and we learned the lesson about not repairing trades. Okay, so we'll end it there. Hope you had a great session and you had a great day today. I will see you guys tomorrow. All right, bye everyone.